sort of outcome, the election outcome. Gautam Trivedi is with us. He's a co-founder and managing partner at Nepean Capital. He's with us here in our studios. Good to see you, Gautam, and good to see you here in our studios.
Hi.
You're just back from the US. We were just talking.
That's right.
And I'm sure that elections and what happens after that came up quite a bit in those conversations. I want to ask you to sort of, put your neck out and say, well, what's going to happen? Yeah. But let me, so something that which Nair said, right? Even if the base case is true and the BJP comes back with a majority, they're saying low single-digit gains for the market. I just want you to respond to that, how you think about it. So this is a slightly more near to medium-term question.
Fair enough. It's a valid question, so it's not it's not putting me in a tight spot, which I was scared you might do. But the fact is, I think around 330, 350 is already priced in. The markets, as we've known for the last 6 to 7 months, it's very expensive. It's hard to find stocks. Even we have a hard time trying to find stocks, mid, small, large cap. Well, there are some large caps that haven't moved, but in the certain sectors, maybe chemicals, specialty chemicals, agrochemicals, that have underperformed. But in general, on a broader scale, the market's obviously pretty expensive. And I think the trip basically where I met a whole bunch of asset allocators, fund managers, I think they're very excited about India from a long-term perspective. There is no doubt about the longer-term India story playing out. And a lot of people ask me, is India where China was 10 years ago, 12 years ago, 15 years ago, depending on their experience with China and India for that matter. But I think the election is an important element in their final decision-making. They would like, I think, for the most part, to see the BJP and the NDA come back with the Prime Minister Modi having a third term, because they believe that's going to be continuity in terms of economic policies and the ongoing infrastructure build-out, which the previous government wasn't that focused on, but these guys clearly are. So that would be a huge positive that would have come. Having said that, valuation still remains a big concern.
So one of the key talking points with all your conversations with investors is political and policy continuity. What else? What else was, top of mind for investors? Because FPIs have been holding back when it comes to investing in India right now.
So you raise a good point, Reema. So if you look at it last year, if you look at the last 3 years, India's been at more than double the valuation of China, right? At one point, I think the valuation gap hit almost 160%, as in MSCI India over MSCI China. So I asked the question, okay, for the last 3 years, India was always expensive. What's changed in 2024 calendar? And what's changed really is the fact that, and considering the fact they put $21 billion last year of net FPI flows that we saw last year, they said, we have an alternative, which is China. So China's, if you look at the table this year, from the amount of money that's come into Asia, Japan's the top with 33 billion of net FPI investment. Then comes Korea with 16, China with 12, Taiwan with 6. So we are actually at the lowest end of the pecking order, but a negative 2.4 billion of outflows this year to date. So I think the valuation has become now an issue because there weren't any major alternatives last year, or more so even the last couple of years. But with the Chinese government announcing a slew of measures to open up the economy, stimulate the economy, money has gone there. Some of it, I think, is still FOMO money because people have been left behind. They've lost money in China. Some people are holding on to their positions. They've come back to life, some of those positions. So they're not exiting China, but incrementally, money is not coming into India as of now. Things could change coming Tuesday if the BJP/the NDA gets a much bigger number than anticipated.
Okay. So, Gautam, let's go back to the central problem, and that you're saying high valuations and tough to find stocks, right?
Yeah.
But what the earnings season has sort of taught us is, at least for some of these capex plays, including a lot of the PSU stocks, earnings are still coming through. At least we haven't run into major disappointments over there. So, I mean, how would you cut it? How would you? I think that's the problem people are facing, right? Do you go with the leaders, which have run up 100%, 200, 300%, or do you wait for the laggards like, say, FMCG to turn around?
So, I think the way to look at this is, and the one question that I was asked across on this trip was, what will cause the correction? When will India come back to, let's say, 18 times or 17 times, which is currently at 21 times, calendar 25 PE? So I think I don't know the answer to that, what's going to cause the correction. Maybe an upset on Tuesday, or maybe a number that's a lot lower than what the market was anticipating. But the problem I see is that the domestic flow is coming in non-stop month after month. In fact, the SIPs are actually hitting a new record high every month. So as a result of which, the weightage of India, the market cap's going up as a result, and the weightage of India from a pure market cap perspective within the MSCI universe actually is increasing, which means the passive funds have to match that, which brings in that FPI flow, which is non-active. I'm talking of non-active. Passive money still has to come and match the increase in the weightage of India. So I think that becomes, in some sense, or has become, what I'm seeing over the last 12 months, a self-fulfilling prophecy. So until there is no slowdown in the domestic flows, which you and I guess all of us sitting in this room, unable to foresee that slowing down, which in a way is also good. The other side of that is that it's good that the financialization of savings is happening. The average Indian who basically 10 years ago, I remember saying, we'll never invest in the stock market, is coming in. So I think it's good for the longer term development of India's equity capital.
We're not
markets.
getting the so-called healthy correction, the deeper healthy correction.
We need that, and I think maybe the government or the SEBI takes some steps to control some of the F&O, madness which is happening right now, post-elections.
Okay, hi Gautam. Good afternoon and good to see you in our building, in our studios as well. Gautam, I wanted to ask you about the EMS space. That's a space where you've been quite positive on. I recall in the past you've said that the EMS space could probably be where the IT sector was in the past. These stocks have run up and they've done very, very well. How much is left on the table for investors as of now?
See, the thing is India going to become the manufacturing hub for IT, for mobile phones within Asia, ex-China? I think the probability of that happening is clearly playing out, and within that comes the entire component ecosystem. So I see that clearly happening over a longer term period. Some of these stocks have had corrections, including some of our holdings. But having said that, I think if you're in for the long haul, you will see the next Foxcons being built in India, for sure.
And picks, Gautam, in that space now, from here?
Well, we hold Sirma SGS, so we still like the stock. But I think Dixon, we don't own Dixon, but I think Dixon will be a much bigger company in the next 3 to 5 years. They're doing all the right things.
What else do you like? I mean,
within the EMS space, or?
I mean, overall, top ideas now.
I think power is still going to be a very big business going forward, power generation, whether it's renewables, whether it's thermal, because if you look at what's happening back in the States, and this is some of the feedback that I got, data centers as a percentage of total consumption of power in the United States is 3% of the total power generated in the US. By 2030, it's going to go to 8% because the number of data centers that are coming up and will be needed given 5G, given...
And power consumption is much higher, right?
Is much higher. So the United States is going to be adding another about 47 gigawatts of capacity, power generating capacity over the next 6.5 years. That's about $50 billion of net investment. Before I left for the States about a month ago, I was on the Blackstone quarterly call, where the chairman, Stephen Schwarzman, basically said that Blackstone, as a private equity fund, has invested $50 billion in the data center business. They have earmarked another $50 billion to be deployed within the data center business, which means their bet, and this is the world's biggest private equity fund with over $1 trillion in assets, that's the big bet they're taking. So I think power generation, newer industries like data centers, there's no pure play today on data centers. Maybe some of those companies will get listed in the future. So you'll see some of that happening.
So what about transformers and those kind of companies?
I think so too, yeah.
Power is a sort of a...
See, the problem in India, and again, I've been asked this specific to one of our holdings called Varun Beverages. Why does this stock trade at 42 times or 45 times forward earnings? The problem I see with some of these sectors, in fact, for that matter, even the wind space, there are only 1 or 2 companies listed. And unfortunately, these stocks are going to trade at a huge premium to the rest of the market or even to their global peers.
But power does not have that problem, right?
Power doesn't have that problem as yet, but specific to transformers, as you asked, there are very few ways to play that.
Correct.
That's the issue.
Any other new ideas? Power is one. Anything else?
If I could just sort of add in over there, since we're talking futuristic sectors, I was just curious on what you're hearing on EVs.
Yeah.
Because, here there are a couple of stocks that are the play, but just want to understand what the overall thought process is. There's some chatter about how adoption is coming down because in India we have our own issues with charging infra, etc. What's your take?
I think there are 2 ways to look at where India is going to be on the EV space. Either it goes the US way, which is you're seeing a slowdown in EV sales, or it goes the China way, which is, incrementally China's EV market. It's not even an ICE market anymore. So I don't know how India is going to play out, but the charging infrastructure, to your point, Surabhi, is that yes, that has to be big enough for people, large enough for people to think about buying an EV and not get stuck between Bombay and Surat, or forget about Bombay, Delhi. That'll take some time. But I think the EV space, the only pure way to play this, we have a stock in our portfolio, which is called Hexacom Systems, which makes the EV charging stations. That's 30% of their revenues. They do other stuff too, but that's incrementally going to become a bigger business. I think I think JLR is in Tata Motors, and assuming once that gets split, that could be one way to play it. And I think Mahindra, they very clearly said 30% of their sales are going to be EV. So, and some of the models that I'm seeing are really fantastic. So my view is there are indirect ways to play EV in this
some of the
country.
battery companies, Excite, etc., right? Which have
They
done so
could be
well.
as well, yes. I mean, they've had a huge run-up, but yeah, valuations aside.
Anything else new? The new thing? Gautam?
I can't think of anything new right now. But I think the good news is you've seen a flurry of IPOs of companies and sectors that didn't exist 5 years ago.
Yeah.
So I think there'll be new stuff coming out soon.
Yeah. By the way, you were in the US for
For
while?
about 3 weeks, yeah.
Wow. So how's inflation? I mean, I was talking to a friend who came back recently, spent 2 weeks. They were absolutely crazy inflation.
So I'll tell you, 4-star hotels in New York are anywhere from $400 to $650. It includes taxes, but no breakfast. A one-way trip from JFK into New York City is $120 by taxi.
Wow.
So, and obviously you have to when you leave, you pay $120 as well. So the cost of just getting into Manhattan is roughly about $250. And that doesn't include the tip, which a cab driver usually expects.
Now we know why the Federal Reserve is going easy on cutting rates, right? Makes
I don't think
perfect
they're gonna
sense.
cut rates. It's not happening. Yeah.
Yeah.
The economy is flying in America
Yeah.
right now.
Okay.
All right. Great to have you with us here, Gautam.
Thank you.
Thanks very much for your time.
Thank you.
And good conversation as well. Well, that's...